Welcome to Divorce Mortgage Strategies, brought to you by the Divorce Lending Association, where clarity meets strategy in the financial side of divorce. Whether you're a family law professional, a financial expert, or someone navigating the complexities of divorce yourself, this podcast is your go-to resource for trusted insight into how real property and mortgage financing intersect with divorce outcomes. We don't just talk about houses. We talk about strategic solutions that protect futures. Let's dive in. Today, we welcome host, certified divorce lending professional Cindy Scobee, and her guest, forensic accountant Eli Neal.
Hello, everyone. I am Cindy Scobee, a certified divorce lending professional, and I am a contributing host today for the Divorce Lending Association. And I have the very unique pleasure of actually interviewing Eli Neal with Four Corners Financial Forensics in Bellevue, Washington. He is the principal and founder of this company. And Eli, welcome today. And again, thank you for being here. And the first question I think I want to ask you is, how did we meet?
How did we meet? I think it goes back to Provisors, maybe the networking group or the Divorce Lending Association, Divorce Professionals Networks. But
I think
he,
so.
yeah,
Yeah, I think the Divorce Professional Network, where you were actually a speaker.
there
And
you go. Now we're old friends now, and we
now
see
we're
each
all
other on
friends.
different cases. That's hard to remember the origin story, but yeah, that's right. Divorce Professional Networks, a great network of professionals helping people through divorce.
Yeah, super, super high need. It's amazing how many professionals are needed in this space, and what you do is so unique. So, can you please provide us with a little bit of background and knowledge about yourself and your practice? And I'll just say specifically why you were led also to being a forensic accountant. I think that's another just kind of interesting thing versus like being a CPA. And I don't want to say just a CPA, but what led you to that as well?
Yeah, well, first of all, thanks for having me. I feel honored to be invited and to provide here. So, I guess a little bit about myself. I grew up on Queen Anne Hill, went to Ballard High School, and went to University of Washington. So, I'm a Seattle native. Then I got married. So, we compromised and moved to Bellevue because that's where my wife is from. So, now I'm in Bellevue. We have a 4.5 and a 6.5 year old, two daughters. And I guess I really have been drawn to accounting since high school. Two of my uncles had their own accounting practice, and I was drawn to that. And I always liked numbers and puzzles. And then forensic accounting specifically, I was at Ernst& Young working a ton of hours for 4 years. My mom and my wife said, you got to stop working 6 days a week for half the year. And I was just looking to get out. So I was almost a pension accountant for a public utility company, and a former coworker reached out to me about forensic accounting. And ever since then, I love helping people. I love explaining numbers to people, and I love, really helping people move on with their life. So it's been such a lucky fit that one conversation one time about what forensic accounting is, I didn't even know it was a possibility. So yeah, better to be lucky than good. Kind of just fell into it.
Well, and obviously you've grown this really remarkable practice. And can you just, like, in a really quick summary, explain the difference between forensic accounting and being a CPA or doing taxes?
Yeah, well, I'd say so. Most of us, almost all of us, are CPAs at my firm. And
Mhm.
so, but there's the two traditional routes of accounting are either tax, and you're filing taxes every April and you're up on the tax law changes and helping with compliance in that way, or audits and you're auditing financial statements, or I guess you're in-house at a company, booking journal entries. And so we're really specialized as forensic accountants. Pretty much all we do now is work with attorneys and their clients in disputes. And we are the fact finders, and we help the clients and the attorneys understand their case. And then if we need to, then we testify and tell the judge, jury, arbitrator, mediator about the financial aspects of their case, because it gets so complicated and people kind of know what happened, but not the details. But we get the statements and we chart it out and give them something reliable to make decisions on.
Great. Now, since this is for the Divorce Lending Association, About how much of your work would you say is related to divorce?
I would say at this point, it's about 50-50 in terms of
Okay.
the types of projects we have. So half divorces, and then the other half is businesses suing each other or
Mm.
owners. A business divorce, two owners that can't get along,
Yeah.
and we're helping them unwind their business.
Yeah. So how do you decide if a case needs your expertise and support?
Yeah, I think our driving light is that we always want to make sure that it's going to be a good return on investment for our
Hmm.
clients, right? Because it
Yeah.
is going to be a cost investment. And I think what we have found is that regardless of if you reach out to us or any other forensic accountant, I think the real secret to what we've been doing is we have a 30-minute complimentary introductory call with the client, the attorney, and us. And
Oh,
each
wow.
of those three people bring a different knowledge base to that conversation. And so we say, why do you think you might need a forensic accountant? Because they might just not understand something, or they might think they have separate property to trace. And then we can all weigh in. We can listen to what's going on, listen to the attorney's perspective and our perspective. And in half an hour, when all three are on the same call, we can make some good decisions for our clients about whether they need us or not. So I'd say the first step is if you're not clear on the financials of the divorce or of the real estate, just schedule that first call with a forensic accountant, and your attorney and the forensic accountant should be able to see if it would be a worthwhile engagement or not.
That's really remarkable, and I'm so glad to hear you say that because I know in my cases, it could be like I tend to say, well, how much do you think is maybe hidden, right? And then I think, well, is it worth it to find 10,000 or 15,000 to pay? So this is really good information that clients and their legal team have this option to talk to you first to see if it's going to be worth it. So I love that. Thank you. Thank
Yeah,
you. That's something I learned.
and I'll add that sometimes the answer is I understand that it's going to be costly, and I understand that I might not be able to recoup this money. We had one case where one of the parties was going to a casino ATM, and they just were curious how much money left the bank accounts over the past 3 years. And that we said, it's probably an uphill battle to ever recover. And they just said, I just want to know. And that's
Mm.
fine if they just want to know, but we want to inform them and advise them that, you're married, both had access to the bank account, so you may not be able to get it back. But yeah, I think we just want to be eyes wide open from the start of what we can do, whether it would be helpful and in what context. And then again, client and attorney can make the decision about whether we can help or not.
That's so important. Specifically, what types of cases have you worked on or most common that you see in divorce?
I'd say the number one most common thing we do is separate property tracing in real estate. So very appropriate for the Divorce Lending Association podcast. And so what that looks like is whether it's premarital earnings or an inheritance during the marriage or a gift from one side of the family. You take that separate property, however it accumulated. A lot of times, the real estate prices are so expensive in this area in Seattle and Bellevue, Washington, that a lot of people are getting gifts or inheritances from their side of the family for the down payment. And so, picture this very common scenario of couple gets married, in inheritances or gifts from both sides of the family to establish a down payment. 2 years later, the marriage doesn't work out. Well, we're often asked to trace what gifts went into the account, what was used to buy the house. The house has appreciated since then. So, what is each side's separate property interest in the house stemming from that down payment? And so
Hmm.
we can trace it through. I mean, sometimes one side of the family, one side of the couple puts in $500,000 and that's now worth $700,000. And so if it's a short-term marriage or even a medium-term marriage or even a long-term marriage, we can usually trace that through to show whose separate property went into the house. And so it's an important aspect.
So, like, let's say that somebody puts in 100,000 and it grows to, do you do the growth aspect as well? So if you contributed 100 and you contributed 50, what's the growth that each, I mean, that might be a little too basic. Is that also like what they should get out of it?
No, it's typically the growth. It's the same as any other type of investment. So let's say the home price doubled over the three
Hmm.
years, and if one side put in 100,000, their interest would there's always the little details, but their 100,000 would turn into 200,000, and the other side's 50 would turn into $100,000. And so, yeah, it's typically not only a right of reimbursement, but it's viewed as an investment because these houses have appreciated so much.
And then do you have to trace it back? Because, I see this a lot where, I had a house, I sold that house, I then put it into the marital home, right?
Yep.
And the house before was my separate property. So that's part of the tracing that you're doing.
We have probably traced through, I don't know, five properties in one line and one train going back a number of years to show what happened to each fund. So as long as we can get the documents, it can be done. That's Washington state law. And so it's a very common thing for us to do and to help with.
And please tell me you have some sort of software that helps with this. I'm thinking that reams and, huge amounts of paperwork to be going through.
Well, so yes, we do for some. I mean, we're accountants. We like going through reams of paperwork, but we do. I so getting back to your original question because I will talk about some of the software in it. So separate property tracing for real estate is an important one. Same type of separate property tracing for stock options at tech companies or retirement accounts, 401ks. There's also business valuations that we do when the parties own a business. How do you account for that in a divorce? Analysis for spousal maintenance because business owners can pay themselves whatever they want for W-2s,
Right.
or just straight commission salespeople who have, really fluctuating earnings. And then the software that we use is called Validate Financials. I know the founders there well. So there's a free
Oh,
plug for Validate Financial, but it digitizes bank statements. We can turn bank statements into over, I think now our largest project, probably 40,000 bank transactions that we digitized and created a database of. I mean, we can now tell anyone anything about any transaction that happened in their account and digitize it. So we do have that software, and that's what we would use for the Snoqualmie Casino ATM case, or, what happened
wow.
where. So yeah, and those are the common buckets. Pension valuations too, I should mention.
Well, I'm sure you have a lot to say and a lot of secrets out there we're not going to talk about. But
Yes, okay.
what about RSUs? Are you
Yeah.
able to help with that?
Yep, RSUs are, yeah, very common for the tech stock investing. So yeah,
Hmm.
there's a formula called the short formula, which is how those are handles. But again, anytime there's kind of a lot of financial activity leading up to the marriage, and then a short, medium, or long-term marriage, and then a time afterwards, that pre-marriage, if we can, if the records exist and we can trace it, it's typically, worth our doing so that that can be treated as a separate asset after the divorce.
Wow. Amazing. Really, truly amazing.
Yeah.
I'm learning a lot today, so I'm grateful for this. Who do you normally collaborate with in the divorce when you're going through a divorce? Besides the family law attorney, the client, who are some other professionals that you typically bring in?
The most important professional to bring in, it's got to be the mortgage lending specialist like Cindy Scobee because you got to figure out if the plan is for you to keep the house, is that an attainable goal? Everyone just waits until the last minute,
I
assuming that
know.
they can take out a new mortgage. And I know we have talked a lot about how that can upend a divorce at the last minute, but it really is surprising how often it's kind of just not even thought about or considered whether the mortgage can be switched over. So never forget the divorce lending specialist. The other people that we collaborate with are the real estate appraisers because we
Yep.
talked about homes appreciating. To get that input into our analysis, we need to know what it's worth, and that's not our role to understand. So I'd say the lending specialists, real estate appraisers, tax CPAs, and the financial advisor or
Yep.
investment advisors can play a
Hmm.
key role. And then, yeah, I mean, I really see us as collaborating with our clients and attorneys and the mediators, the judges. I mean,
Hmm.
we want to work the opposing expert. I've had a lot of calls with the opposing expert. I mean,
Mm.
all I care about is getting a reliable number so these people can settle and move on. And so I'm happy to collaborate with anyone to make that happen and make sure I
Yeah.
understand everyone's perspective.
Which is so important because I think in this work, it's easy to just go straight to the attorney and think that the attorney can do all this.
Hmm.
And, they can do so much, but they're limited. They just don't know what's kind of, in your world, what's new and you can access and know about versus like in my world, same. And just a little plug around like, the lending side is people get really, really stuck on the house because a lot of times it's their largest asset and that's like the singular focus. And they want to keep the house, but if they can't qualify or they can't really afford it, right? Post divorce, and you've settled that way, not knowing, not talking to someone like me who does the mortgage analysis around divorce. I'm not here to do a mortgage. You may settle in a way where now you put in all this energy, time, and money and hired all these professionals, but now you can't actually, bring to fruition what it is that you were focused on. So, anyway, that's just a little mention. So, thank you for mentioning
No,
that. But
yeah, I mean, I really see it all the t not all the time, but too often that's the case. And I mean, the other thing is just the emotion tied behind
I
the
know.
house and the family home as well. It makes it a really critical factor to think about and get some open eyes on. That's why we have the intro call with the attorney, client, and us, because everyone just knows their piece. A
Hmm.
blending professional knows their piece. So
Yeah.
attorney's the
Yeah.
quarterback, not the whole team.
Yeah. And how often does your firm actually end up getting called in for, to testify in cases, would you say?
Yeah, it happens. Sometimes there's no other way than to testify, but our goal is always hopefully to have people settle. I've testified 40 times, and so that's maybe going to be less than 5% of our cases. It's really costly, really stressful to go to trial. And then you have a judge who's busy making decisions about your life. So I always say if it's possible to settle, I think that's great because then you got the control. But if you need us to testify, then we'd be happy to do it and give the judge the full picture as well. But very small percentage of cases actually go to trial.
Yeah, for sure. And that's the same. My experience is testifying is not common, thank
Yeah.
goodness, because that's just like you said, it's so expensive. If we can settle, it's about all the information and then going in smart to settle, hopefully. How long do you think that typically analysis and just the cases take, would you say, if you could speak a little bit to that?
Yeah, it really, everyone is different, of course, and so it really depends. I would say the majority of our projects probably take 2, 3, or 4 months between that intro call, getting signed up, getting the source documents, working collaboratively with the attorney and client to this is what we see. Does that make sense to you? No, you're missing a document. Okay, get us that document. Now does this, seem right? This is what we're seeing. You told us something different up front. So we're pretty collaborative because we want to make sure that by the end of it, all three of us client, attorney, us, any other professional, that we all have kind of seen the whole process where we're going. And so that usually takes 2, 3, 4 months. We have cases that are on 2, 3 years now, which is a long time to be living through it. We sometimes have availability and sometimes get a call saying trials. in 2 weeks. And so that can happen, but often we just don't have the time. So giving it the 2, 3, 4 months, make sure we have enough time to do it right.
Absolutely. Yeah, for sure. I love this question. Do you have one memorable case that you've worked on? And if so, what impacted you the most about that case?
Well, well, I mean, I would say every case is memorable. The ATM withdrawal cases, the OnlyFans cases now in this day and age are always interesting, but I guess for me, like our number one goal is to give reliable numbers to the attorney and client so they can look at it, make a good decision, and settle their case. And for us, the number one indication that we did that is for judges and juries to pick our number exactly when the other experts are 2 or 3 times higher or 2 and 3 times lower or just
Mhm.
different. We want to be the people that get the number copied and pasted into the complaint. So I've had 2 juries pick my number exactly over the summer. We had, I think, 3 judges copy and paste our exhibits into the final order. And so that's the thing that always sticks out is really validating for the work that we do to say, we
You
gave
bet.
the people depending on us the right information. And that's always a big win. And then if our numbers don't get picked or if it's not exactly, then we are always so interested to see what we could do better for the next time to make it so.
Yeah. Wow.
Yeah.
Well, Eli, I so appreciate you sharing your valuable time today with me and answering these questions. And I so respect you and what you've been able to accomplish. I always hear your name and the firm's name pretty much whenever I talk to anybody and forensic accounting comes up, I mention you. Oh, yeah, of course we work with Eli. And, I just am super grateful that you took the time today to do this interview with me. And therefore, I want to ask, someone, needed to find you and your firm and the services that you offer. Could you just mention how people find you?
Yeah, well, first of all, that's very kind of you to say. I feel the same way about you, Cindy, and mention you often. And everyone should know, I mean, it is not just me. We're now a team of 9 professionals, and they're all fantastic at their job and so detail oriented and so in tune with managing timelines so that we nail it for our clients every time. I'm really grateful to work with a great team. And if you want to find me, of course, you can Google Four Corners Forensic Financial Forensics. Last week, we had our first referral from ChatGPT. They asked ChatGPT, what forensic accountant should we hire? And we came up. So I don't know. You can go to AI and hopefully you'll find us there. That was fun to hear.
Wow, that's so fun. I love
Yeah.
that. Do you have any final thoughts as we wrap this up that you want to share?
Let's see. I think I would say this podcast and thinking about lending and divorce, it is the biggest asset and it is the one that has the most emotion. I would think if I was going through the situation, I would want to think long and hard about what's possible and what's my post-divorce looks like. So I appreciate that. I sincerely hope no one ever needs Cindy and my help for going through a divorce or to be in a financial dispute. But if you do need the help, we'd love to be part of your team and help you through it and help you move on.
Yeah, and I think too, I'm going to say, you're just such a nice person. When people are going through this, I think having really caring people in your corner matters. And I just will say, I just think you're just such a kind, easy to talk to, and it's not just like super hardcore, we're doing this type of thing. Because I mean, there's a place for that, but there's also a place in this space to be heart centered. Thank you for being one of those people. It matters.
Yeah, well, thank you. Our guiding light is whatever is best for the client, we will be
That's right.
okay. And I truly believe that. I appreciate you saying that.
Absolutely. Well, thank you again for today. You're rocking it. Good job to you and the team there. I look forward to talking to you again.
Thanks for joining us on Divorce Mortgage Strategies, powered by the Divorce Lending Association. If today's conversation brought you clarity, insight, or inspiration, we encourage you to subscribe and share this episode with others in your circle. For more resources, or to connect with a certified divorce lending professional in your area, visit divorcelendingassociation.com. And be sure to download the free Divorce Strategy Hub mobile app for tools, education, and support designed to guide you through the financial side of divorce. Until next time, remember, in divorce, the mortgage isn't the problem, it's the plan.